Hi friends, welcome back to Stockwood channel. The Indian IT sector has become one of the most significant growth catalysts for the Indian economy. The IT sector accounts almost around 7.4% of the India's GDP in FY22, and this is expected to contribute almost 10% of the India's GDP by the year 2025. And remember that the India's GDP itself is expected to grow by 8 to 10% in the next 3 to 4 years. So there are various reports in the public domain about the Indian IT tech industry, that is it will be doubling in the next 8 to 7 years to the levels of around 500 billion from the current levels of around 245 billion. So that is the growth projection of the India's IT industry. But in the recent times, you would have come across other reports, mainly from Fitch, that the Indian IT sector growth will reduce to the levels of 8 to 10% from the current levels of around 16% growth. So in this scenario, most of the investors are worried where to invest for a handsome returns. So in this video, I'll be covering about the valuation of the Nifty IT index and how investors can make good returns in the long term, that is for an investing horizon of about 4 to 5 years. And also we'll be discussing about some of the stock specifics in the IT industry and its valuation and the growth perspective. So if you have not subscribed to my channel yet, please consider subscribing to my channel so that you can get regular updates whenever I release new videos. So without much delay, let's get started in today's video. Here I am on the Nifty IT index price chart from the year 2018 to the current year. I have also included the Nifty index price chart as a comparison. So here you can clearly see that in 2018, the Nifty IT index was trading at the levels of around 15,000 points, while Nifty 50 was around 11,300. In the current scenario, the Nifty IT has given almost around 105% returns in the last 5 years, while Nifty 50 has given around 72% returns. Also to be noted is that the Nifty IT index has corrected sharply in the last 1 year from levels of 39,000 to the levels of 30,000 currently. So on a historical basis also, Nifty IT index has given better returns than the Nifty 50. Given the projections from some of the rating agency, the IT industry is expected to grow further in the next 3 to 4 years, and investors investing in this period in SIP mode for the next 1 or 2 years will give handsome returns over the long period. This is because if you see the Nifty IT PE, which is around 25, which is around the average of 5 years. Well, the revenues are expected to come down in the next few years. Investing in Nifty IT for the next 12 to 18 months will give a good returns whenever the IT industry start performing well. Now to the stock specifics. If you see the Happiest Mind Technologies, it has a market cap of around 13,500 crores, but the stock PE is currently trading at around 61 compared to the industry average of 34.7, which is very high. And also another negative point about Happiest Mind is that the debt to equity of this company is around 0.66, which is relatively very high compared to the other IT stocks. If you see the price chart of Happiest Minds also, you can clearly see that the stock has rallied significantly from the year 2020 from the levels of around 320 to the levels of 1,500, and has significantly corrected by almost 50% and currently trading at the levels of 1,000. If you see the annual report of Happiest Mind, one of its major business segment is product engineering services, which contributes almost 50% of the overall revenue of the company. But if you see some of the service offerings of this company, it looks very similar to most of the mid-size IT companies or the large cap IT companies. So there is huge competition for this kind of services in the IT industries, and I don't expect Happiest Mind to grow exponentially from this point. With that fundamentals, I don't see why the stock PE is trading currently at a premium of almost 61 compared to the industry PE of 34.7. So investors should be careful while investing in these kind of high valuation companies before investing. The next stock I'll be talking today is Persistent Systems. The market cap of this company is also around the same levels of around 37,700 crores. But the positive point about the Persistent System compared to Happiest Mind is that the stock PE is near to the industry PE. And also the debt to equity of this company is much lower than Happiest Minds. Also, if you see the price chart of this company in the last 5 years, it has given handsome returns of almost 10x from the levels of around 600 to the levels of 5,000. Again, if you see the annual report of a Persistent System or also the website of Persistent System, I don't see any of their services being a niche area compared to its competitors. So again, the growth of this company will be moderate in the coming next few years, and I don't see an exponential growth in this company. If the information shared in the video is useful, humble request to hit the like button and subscribe to the channel. It motivates me to come with more such videos and help the YouTube algorithm. So the third stock I'll be talking today is Tata Elxsi. The Tata Elxsi has a market cap of around 44,000 and debt to equity of 0.09. Also, if you see the stock PE of this company is 58 compared to the industry PE of 34.7. Also, the stock has rallied significantly from the levels of around 850 to the levels of 10,000, and then it has corrected significantly by almost 20% and currently trading at the levels of around 7,000. Not only the price of a Tata Elxsi, the PE of this company is also reduced significantly in the last 1 year from the levels of around 100 to the current levels of around 58. But still, the PE of Tata Elxsi is much higher than the industry. The reason why Tata Elxsi commands a significantly higher PE compared to its competitor is its product. Tata Elxsi is not a pure play software integrator company, but it has various software products which it sells to various of the other companies. If you see one of their business vertical, which is automotive, they are into very niche and cutting edge technology like advanced driver assistance, autonomous driving, electrification, and connected car solutions. These are some of the product mix of Tata Elxsi where it will be directly sold to the end customers. So not only in automobile field, it has also various products in the healthcare sector and also in the media sector. Since Tata Elxsi sells products while the other software companies sell services, the operating profit margin of Tata Elxsi is comparatively higher or at the levels of around 32, 33 and 30 in the last few quarters compared to the other IT companies which has an operating margin of around 17 to 20. So this is the reason why Tata Elxsi usually commands a higher PE compared to its some of IT peers. So this was a short video about the overall IT industry in India and the future growth perspective of IT industry. Hope you like this video and subscribe to my channel. I'll see you in the next video. Thank you.